All right. Well, if we have to pinpoint the one sector that's really been in action, especially in these last couple of weeks, it's got to be the banking space. In fact, the Nifty bank itself, if we just sort of shorten the time horizon and look at it in the last 5 days, it's added a good 1,000 points. So let's decode this uptick that we've seen in banks within the entire banking pack. How should you be playing and positioning yourself from private banks to SFBs to perhaps even the financial names like insurance and NBFCs? To talk about this, I have with me Vinay Sharma, Fund Manager of Nippon India Mutual Fund. Vinay, thank you so much for taking our time and joining us today. So let's talk about the setup that the banking environment is looking at right now. We've come off from the second wave. We've seen banks take provisions accordingly for what they believe could be asset quality problems engendered by the second wave, and now we are staring at positive indicators that point to the possibility of good credit growth. So do you think that from now we are looking at a sweet spot for banking where the worst is behind and maybe good times are to come?
Yeah, so clearly banking sector has gone through its ups and downs over the last 6-7 months, and it has been a relative underperformer to the market as well. And the reasons, as you mentioned, were the second wave of COVID, the asset quality stress that was anticipated after that, and results being not so great compared to some of the other sectors. Also, one has to remember banking is one of the sectors which, even after the base effect, is showing single-digit growth in terms of credit and credit instruments, whereas most other sectors are expected to show very healthy growth once the base effect plays out. So I guess that's the reason for banking to do what it has done over the past few months. Looking ahead, just a caveat that if third wave doesn't happen, then surely banking looks to be on a sound footing on fundamental basis. We've already seen the latest data is showing some signs of uptick in credit growth. We have seen, you were just talking about corporate capex cycle picking up, and even if capex cycle doesn't pick up, we have seen corporates deleverage in India now for 4 to 5 years, and their balance sheets are as good as what they used to be probably before the financial crisis. So therefore, we feel corporate credit might pick up sooner than what most street is expecting. Retail credit is going steady. And another good sign is real estate cycle picking up in India, and housing is such an important part of household balance sheet. So if real estate cycle picks up, that bodes well for banking sector as well. So overall, unless a severe third wave happens, we believe things have turned positive for the sector. The economy is looking good, and valuations are in your favor since the sector has underperformed quite a lot over the past 5-6 months compared to the broader market.
Okay, so whenever we're making a case of corporate credit growth coming in, how would you play that? Across banks, what's best place to capture that, credit offtake? And also, would you now look at the banks that have more corporate book or retail book?
Yeah, so frankly, distinction between corporate and retail credit has now disappeared between the large 4 or 5 banks, except maybe 1 or 2. Because what has happened is last few years, most erstwhile corporate banks have also just grown their retail book since there was no growth in corporate banking anyway. And therefore, today, balance sheets are largely between 60-40, 50-50 between retail, corporate in that order. So to play the improving fundamentals in banking, what we really like is the large private sector banks and some of the large PSUs as well. Why we like the larger banks over the mid-sized and smaller peers is, one, these banks have great access to capital. They have been able to raise capital as and when they want from markets. They have provided good provisioning for the anticipated COVID stress, and therefore balance sheets are also quite healthy. And third, given the kind of technology changes that are happening in this sector and the kind of investments that are required in technology, we believe that these banks are the best place to, partner with new fintechs, invest in technology, and keep up with time. So therefore, large private sector banks and some of the large PSU banks is what we would recommend in the sector.
this entire market's re-rating for banks becoming fintech and fintech becoming bank, Bajaj Finance getting re-rated because it's moving into a platform. Where do you think the middle path is? Not every bank can become fintech and not every fintech will become bank. Every bank is saying we have technology, but not every bank will make it to the cut. Whom do you think will be the eventual winner in this so-called platform stroke fintech adoptability?
Yeah, so I can't talk about individual companies, but what I would say is that, as I said earlier, it's the large banks with good operating profitability or the large finance companies where operating profitability is fairly high. Those are well placed to capture this phenomena of becoming a platform or investing in technology. See, what you need is access to talent, access to capital, a large customer base. And if you look at the large entities in India, they have all these prerequisites. Their customer base is fairly high. They can access great talent in terms of technology personnel, as well as they are attractive places to work at, and they have the data. So if there's any chance of some of these large banks to have or some of these entities to have a great play in technology, it has to be the larger banks, in our opinion. The larger banks and some of the larger NBFCs as well. And I think while we have seen fintech taking away some market value from banks in developed economies, I think in India the scenario might be a little bit different, because one, in India, these banks have access to easy capital, and therefore they can pick and choose partners at some point, also buy some of these fintech firms if they think they are becoming a threat to their market share. So that is one point. And second, these banks have, as I said, huge customer base. So as long as they can analyze that customer base, cross-sell, do data analytics, they are in a great position to partner with some of these fintechs, or even fight with some of these fintechs.
Couple of years ago, the buzzword was microfinance. Then it was small banks or small microfinance companies which have become small finance banks. But that's one end of the financial space where the crunch is there. Bandhan is struggling, Ujjivan is struggling, AU is struggling. What happens to this, to some of the new kids on the block? Because the positioning of some of these banks were that, look, they've got a microfinance book, which is a high margin book. They will be able to grow because they are small in terms of size and they have very unique customers and enjoy penetration. What will happen to the so-called small finance space, SFB?
Yeah, so I guess without analyzing, first thing I would like to say that there is no doubt that there is a great opportunity in the bottom of the pyramid space and in some of the customer base that they are trying to address, which is your urban poor, rural poor, small MSEs, MSMEs and stuff. So opportunity-wise, I don't think there's any dearth of that in India. What has, I think, hampered them over the last few years is that macroeconomic shocks have happened at regular intervals. So you had GST, you had demonetization, then you had this COVID. And therefore, they have really not got a launching platform of steady 3-4 years, which a new business, I guess, requires to catapult itself. So that is one reason why these banks have not really done so well compared to some of the other entities. But we do believe that selectively, some of these have good management. They have the right kind of talent. They have the technology partnerships, as I was talking earlier. And therefore, some of them can create value given the opportunity size that exists in India. And before these banks came into this avatar, they were mostly microfinance entities, or they were the entities which were actually dealing with this sort of customer base for a long period of time. So they have the know-how of how to deal with this customer. It's just that probably macro has not favored them for the last 4-5 years, and which is what has hampered them, as I said earlier. But one has to be selective. One has to look at the right management pool, look at the right customer base sorts. Pure microfinance business, as we have seen across last 5-6 years, it does suffer from sort of its own ups and downs, because when the cycle or when the things are going tough for them, these entities do suffer a lot. And therefore, we like SFBs more than pure microfinance entities because SFBs give you that diverse profile compared to pure microfinance entities.
Okay. Since you run a a fund which in a sense is for financials, given that 5-6 years ago the option to buy into financials was limited, you could only buy the 3, 4, 5 private banks and some small banks. But now the space is expanding. There is AMCs, insurance companies have got created. So do you see somewhere the flows which came into the traditional banking funds or banking stocks like HDFC Bank or an ICICI Bank or an Axis that will get challenged? Because the mandate is to run a financial fund and the options now to bet on the financial space are plenty.
So I would say that's a good thing for our investors, right? Because you are getting more diversification in sort of sector fund, and sector funds are generally considered to be more volatile. So diversification sort of reduces volatility. Also, as I said earlier, across the world, we have seen some of the new business models like fintechs or platforms. They have created huge wealth for their investors. And we anticipate the same to happen in India over the next 4 or 5 years when some of these businesses come into public markets, which is starting to happen from this year itself, right? So, therefore, from a flow point of view or from investment point of view, we believe this is a great thing that has happened, that you are getting more options now within the financial services space. You are getting an angle of technology within the financial services space. So from an overall investor's point of view, this is a good thing actually, and I would not call it a negative. I would call it a really good thing.
Okay, Vinay, great to have you on the show and getting your perspective on where you're finding value within banks right now. It's clearly the bigger boys who stand to win a chance.